Hello everyone, and welcome back. I am Suresh Periyasamy. In our previous videos, we looked at how to account for assets and how to manage them. Now we are putting on our auditor's hat. Auditing property, plant, and equipment is one of the most common tasks for a new auditor, but it is often done poorly. Today, I am going to show you how to move beyond just ticking and bashing to actually testing the risks. We will cover the specific procedures you need to perform and, crucially, what evidence you need to document. Before we test anything, we need to know why we are testing it. In auditing, we test assertions claims management is making about the financial statements. For PPE, we focus on 5 key areas. Existence. Management claims the factory exists. We ask, is it actually there, or is it a phantom asset? Valuation. They claim it's worth $1 million. We ask, is that depreciation calculation correct? Is it impaired? Completeness. We ask, did you forget to record any assets you bought? Rights and obligations. We ask, does the company legally own this, or is it leasing it? Presentation. Is it disclosed correctly? Where do things go wrong? As an auditor, you must be skeptical. The biggest risk in PPE is usually capitalization versus expense. Management wants higher profits. The easiest way to boost profit is to take a $1 million repair bill, which should be an expense, and hide it in the balance sheet as an asset. This spreads the cost over 10 years instead of taking the hit today. We also worry about ghost assets, items that were scrapped or stolen years ago but are still on the books, inflating the company's net worth. Imagine the client bought a new delivery truck for $50,000. It's listed in the ledger. The test. You select this item and ask management for the voucher package. You check the vendor invoice to confirm the price was $50,000, not $40,000. You check the date to ensure it belongs in this year. Crucially, you check authorization. Did the board of directors approve this truck? If the limit for a manager is $10,000 and they spent $50,000, that is a control failure. What to document? A copy of the invoice. A snippet of the board minutes or CapEx request form showing the signature. A statement saying, agreed cost to invoice and verified authorization per policy. Next, we test valuation. Is the math right? We rarely recalculate every single asset. Instead, we use analytical procedures. If the client has $10 million in machinery and they depreciate everything at 10% straight line, the expense should be roughly $1 million. The test. If the client records only $500,000 in expense, something is wrong. They might have stopped depreciating assets to boost profit. You also pick a small sample, say 5 items, and manually recalculate the math in Excel to verify their system isn't broken. What to document? Your reasonableness calculation, the expectation versus actual, your recalculation sheet for the specific sample items, management's explanation for any major variance. Now, the fun part, going on site. This is the physical verification. Students often confuse floor to sheet and sheet to floor. Let's make it simple. Test 1. Sheet to floor. Testing existence. The logic. I have the list. Sheet. I want to prove these items aren't fake. The procedure. I pick a generator from the list and walk to the factory floor to find it. If I can't find it, the asset list is overstated. Ghost asset. Test 2. Floor to sheet. Testing completeness. The logic. I am standing in the factory. I see a shiny new machine. I want to make sure they didn't forget to record it. The procedure. I pick the machine on the floor, write down its tag number, and go back to the office to check the sheet. If it's not on the list, the assets are understated. What to document? The count sheet with your ticks. Photos of high-value assets. Optional but good practice. A specific note on the condition. If you saw a machine that was rusty and covered in dust, document that as evidence for potential impairment. Finally, ownership. Just because a machine is in the factory doesn't mean the client owns it. Real-world example. The client might be driving a luxury car, but the registration might be in the CEO's personal name. Or they might have pledged the factory building as collateral for a bank loan. The test. For land and buildings, do a land registry search or look at the title deed. For vehicles, look at the government registration papers. For liens, look at the bank confirmation letter to see if assets are restricted. What to document? Copies of title deeds or title search results. Confirmation that the name on the deed matches the client's name exactly. Auditing PPE requires a mix of desk work, math and invoices, and field work, physical counts. If you execute these procedures correctly, you provide high assurance that the assets are fairly stated. If you are a student struggling with audit assertions or need help designing audit procedures for your exams, I can help. I offer one-on-one tutoring where we break down complex audit cases. You can contact me via the SuperProf link on the screen. Thank you for watching, and happy auditing.